Welcome to this video, which focuses on support and resistance. In technical analysis, you will hear these two terms very frequently, and you will come across them in this training, where you will learn to master Arya. In this video, I want to explain how to identify support and resistance levels, what is a breakpoint of a technical level, and why it's important. A support level is a sort of technical level below a trough, meaning below the current price of a financial asset. The support will act a bit like a floor or a trampoline, off which the price will bounce upwards. This means that the price is more likely to bounce back, and this level will simply make the price increase rather than carry on decreasing. It's a bit like a psychological market level where the price will not decrease, therefore giving you an opportunity to buy. Conversely, a resistance level is above the current price of a financial asset, and it is not a support but a cap, meaning that the price will simply act as though there is a resistance, so the price cannot increase. When there is a resistance level, it means that the price is more likely to decrease from this level, that is, to drop. A resistance acts a bit like a level where the price cannot progress anymore, and where the price can take a breath until the next breakpoint. It's a level where investors will tend to close their position by selling the asset because they think that an increase is no longer possible, or, quite simply, a level is reached which is significant for the market, meaning that it's the right time to take your gains. Identifying these technical levels is very important for success on the financial markets, and for learning to configure and control Arya properly. Specifically, you will use several factors to find support and resistance levels. First of all, the peaks and troughs formed by the candlesticks. Quite simply, this is what we call tops and bottoms, or U. We will look at this in more detail in this training. The shape of the candlesticks is also important and indicates a downturn in the trend and a reversal, and also technical indicators such as moving averages, pivot points, or even Ichimoku. We'll talk about this in more detail in this training. In the module, we will look at Arya tools for learning to identify these levels more easily. I also want to go a bit further in this video and talk about breaks, as this is an important point to analyze, since these will essentially break either a support or resistance, and you will see this very frequently on the financial markets. At the beginning, you can see that the price will be blocked on 3 occasions at a resistance level, which indicates a significant technical level. You can see that the price is struggling with this resistance. Next, you can see that the price will break the resistance, and you are seeing a continued increase until the next major resistance level, and it is the market's goal to touch this next resistance level. It is important to know that the market is always working with support levels and resistance levels, and in reality, that is the only factor that is important. Here we can see something important very clearly. The broken resistance level is actually acting as a support. Finally, it is also important that a resistance can become a support and vice versa. You can clearly see that this is a support off which the price will bounce several times. An important question to ask is, will a resistance or support always be broken? The answer is no. There are cases where it is impossible to break the resistance or the support in the short term, and the price will therefore simply move in the other direction. Having said that, the more a significant technical level is broken, the stronger the trend after the break. It is important to understand this level and to position oneself properly in order to profit from this situation and the trend which is playing out. I just want to go into a bit more detail with the explanation. We began to look at the support-resistance levels. Support is a technical level from which the price will increase, so a support is a bit like a trampoline. Resistance is a bit like a cap, where the price, at a given time, will decrease again. We can see this on several occasions, this downward effect. You can see it right here. As you can see, there is pressure to sell, and just after, the price tends to decrease. Okay, exactly the same thing happens in the opposite direction. We can see this on several occasions, But I'm not going to show you all of them. I'm just going to show you the most obvious ones to help you identify the pressure to sell and the pressure to buy. How do you identify them? They are simply peaks and troughs, and there are peaks and troughs which repeat themselves, increasing the number of resistance levels. This means that there will be a price level on which the market will work. You can see this quite easily on this graph. If you look at what's happening on the different levels, if I draw a rectangle here, what can you see? You can see that the price, on several occasions, is beaten down. Here, here, here again, and here for a third time. This means that here, after 3 points of contact, second, third contact, after 3 points of contact, there is a price level which is validated by the market. Okay? In other words, this is a resistance level. When just after this point, when the price touches that point again, something will happen. What happened just here, the price bounced back, broke, and continued its upward trend. The same thing happens with resistance and support. This is extremely important, and that's what I told you in the theoretical part a moment ago, that we have 3 resistance levels, and then what happens? The resistance becomes the support. That's exactly what happened with our chart on the right. The resistance, once broken, became the support, to provide a bit of momentum, like on the trampoline, to simply continue the asset's trend. So, as a reminder on how to identify technical levels, look at the peaks, the troughs. What specifically is happening with your chart? How are the candlesticks forming? If there is no longer a clear wick, analyze the wicks, as this indicator will really help you to see these much-touted levels which are created by the market. The technical indicators, which we will talk about at more length in the rest of the training, are also there to help you.